You know what's funny? Right now, while you're watching this, there are people out there literally praying for a recession. I'm serious. They're sitting on piles of cash, watching the market like hawks, waiting for everything to crash. And you know what? They're not crazy. They're smart. Because here's the secret nobody tells you. Recessions don't destroy wealth. They transfer it. From the panicked to the prepared. From the emotional to the strategic. From people who think recessions are disasters to people who know they're the biggest sales event in capitalism. Warren Buffett is 94 years old. He's lived through 14 recessions. And he just did something he's only done twice before. He sold over $100 billion in stocks and is now holding more cash than ever in history. That's not a coincidence. That's a signal. And if you don't understand what he's preparing for, the next 18 months could either make you wealthy or destroy you financially. Let me show you which one it'll be. October 2008. Lehman Brothers collapsed. The financial system is on fire. People are losing homes, jobs, retirement accounts. Everyone's panic selling. Your neighbor, your boss, your financial advisor. And Warren Buffett? He writes a New York Times op-ed, Buy American, I Am. People thought he was insane. But Buffett was following a 75-year strategy, and it made him billions while everyone else lost their shirts. He bought Goldman Sachs, General Electric, Dow Chemical, billions deployed while everyone else pulled out. Those investments made Berkshire $10 to $20 billion. Why? Because he understood recessions are sales. Black Friday for stocks. Imagine your favorite store. Everything's 70% off, today only. You'd load up, right? But when stocks drop 50, 60, 70%, people panic and sell. That's where fortunes are made. But you can't wing it. When your portfolio is down 40%, your brain screams, sell, get out. You'll make terrible decisions. That's why you need a strategy before the recession. Here's Buffett's playbook. Step 1, build your war chest. Cash is king going into a recession. During downturns, cash is power. It's ammunition to buy when everything's on sale. If all your money is invested, you can't take advantage. You just watch your portfolio bleed. Buffett keeps massive cash reserves for this reason. People criticized him. Warren, $150 billion sitting idle? That's wasteful. But he was waiting for the sale. How much cash? Minimum 6 months of expenses. Beyond that, 10 to 30% of your portfolio as an investment reserve. Build your war chest now. Step 2, make your shopping list. Know what you're buying before the recession. During it, fear runs the show. So prepare now. List 10 to 15 businesses you'd love to own if they were cheaper. You're not looking for cheap garbage. You want quality on sale. Great businesses, strong brands, competitive advantages. During recessions, wonderful companies become available at unfair prices. Study them now.
Know their worth. Then, when stocks drop 40%, 50%, you just execute. Example, 1963, the salad oil scandal nearly destroyed American Express. Stock plummeted. Everyone panicked. But Buffett had studied them. He knew their brand was valuable. So he bought heavily, 40% of his fund. That investment made him multiples, only because he'd done his homework before the crisis. Step 3, never use leverage. Non-negotiable. No margin, no borrowed money. Leverage destroys people during recessions. You borrowed to buy stocks. Markets rising, feel safe. Then recession hits. Stocks fall. You get a margin call. You're forced to sell at the bottom and lose everything. Buffett has never used leverage. Never. Because investing compounds wealth over time, but leverage can wipe you out in one event. Game over. Rule: only invest money you won't need for 5 years. When a recession comes, you can hold on. You don't have to sell. You wait for recovery. and recovery always comes.
All right, let's continue with step 4. And this is where the pros separate from the amateurs. Focus on balance sheets. During a recession, companies drowning in debt get absolutely wrecked. They can't make payments, they go under. And shareholders? Wiped out, banished. So you hunt for companies with fortress-like balance sheets, low debt, piles of cash, rock-solid credit ratings. It's not enough for a company to be cool or have a hot product. It has to be financially indestructible. Think about the 2008 meltdown. When Warren Buffett went shopping for banks, he wasn't just throwing darts. He was dissecting their financials. He saw JP Morgan, they had capital, they had liquidity. Jamie Dimon had run that ship conservatively. That's where Buffett put his money. Meanwhile, what happened to Washington Mutual, Wachovia? They disappeared. Poof, gone forever. The strong survived and came out on top. That's why balance sheets are everything. Step 5, think in decades, not days. This is the one that breaks most people, because when you're in a recession, it feels permanent. The sky is falling. The world is ending. But it's an illusion. The U.S. economy has been on an upward climb for over 200 years. Sure, there are brutal dips along the way, but the long-term trend is always up. Buffett bought Coca-Cola in 1988. Since then, we've had the tech bubble burst, the '08 financial crisis, a global pandemic. Did he sell? Not a single share. Because he wasn't buying a stock for the quarter, he was buying a piece of a business for a lifetime. And that investment today is a monster because he didn't panic. He played the long game. Buffett's mentor, Ben Graham, put it perfectly. In the short run, the stock market is a voting machine, a popularity contest driven by fear and greed. But in the long run, it's a weighing machine. It weighs the true underlying value of a business. So if you're a real investor, you tune out the daily noise. You focus on owning great companies, and you let time do the heavy lifting. Now for step 6, and this might be the most crucial of all, live below your means. If you're living paycheck to paycheck, spending everything that comes in, you can't save, you can't invest. You are completely exposed. When a recession hits, you're one missed paycheck away from disaster. Buffett, one of the richest men on the planet, has lived in the same house since 1958. The same house.
No yacht, no fleet of supercars. Not because he can't afford it, but because what he craves is security. The absolute certainty that no matter what happens in the world, he's going to be okay. That feeling is worth more than any luxury item. So here's the strategy, and it's simple. When your income goes up, your lifestyle stays the same. You save and invest the difference. You live like you make half of what you actually do. That's how you build a fortress. That's how you prepare. So here's the bottom line. A recession is coming. I don't know when. It could be next year, it could be 5 years from now, but it's on its way. And when it gets here, you have a choice. You can panic and sell at the bottom with everyone else, or you can execute your strategy. You can see the recession for what it really is, the biggest opportunity you will get this decade. Build your cash reserves now. Make your shopping list. Study great businesses. Avoid debt like the plague. Think long term. Do those things, and when the next recession hits, you won't just survive, you will thrive. Because while everyone else is panicking, you'll be shopping. And that is how fortunes are made.